what should I say? Kabisa.
That would be correct.
Yes.
That would be correct, yes.
It's been a pretty long journey. This is my 41st year in profession. So I don't think that I remember everything that has happened in these years.
Yeah.
I was 21 years old and I needed a job. And I just happened to see an advertisement for a trainee in American Express. This was back in India, in Delhi. And I was doing my accountancy profession. So I said I was too bored with accountancy, so I said let's go to industry and start early. And I just happened to get a job, not because necessarily I did very well in the interview or something, but they needed some warm body, I guess, so I got the job. So if I was to tell you that, I wrote a script and I was following the script, that would be a complete lie. The way I see it is that, once you get exposed to a bigger environment, something different, it starts to change your perspective. And that's exactly what happened when I joined American Express, because it was an international company. And then that led to one job and the other job. And then all of a sudden, I got a job as a CEO of DCB Bank 16 years ago. And it was a bank which was not doing well, it was loss making, and it looked like the bank would have to merge with another bank at that point in time. But I was blessed with a very good team, and the promoters were supportive, the board was very encouraging, and then we started rebuilding that bank. And when I left in 2024, the bank was in pretty good shape. So I handed over charge to my successor, and I was sitting at home when I had the opportunity to discuss about DTB. I know DTB for a long time because I've interacted with Naseem, the wonderful lady. She has built this beautiful franchise with the help of the entire team. And I said, my children are away in different countries. I told my wife, let's pack up the bag and go to Nairobi. Initially, she didn't come with me. Then once she came here, saw the city, saw the beautiful people, and the weather is, outstanding. Coming from a 45 degrees to 20 degrees, it's not such a big decision.
Promotion.
Yeah, it is a promotion. So I landed up here. The bank is in good shape. The responsibility for me and the team here, with the support of Naseem and the board, is to how do we build this from here?
Yeah.
We are a top tier 1 bank.
Yes.
We have high quality customers. We have about 90 branches. So I think it's a huge opportunity. So it didn't take a lot of pushing for me to pack up my bag and arrive in Nairobi. I want to tell you what happened last week. There is a small restaurant in my building, and it's run by a person from India. He knows about restaurant, and he is investing in some completely unrelated business. And I asked him a simple question. What are you looking for? He says, I'm looking for more returns on my saving. I told him, do you know you have A, B, C, D, E options, financial options, which just without too much effort, by speaking to people like me or my bank, you will be able to do that. And he must be at least 40 years old. He's an educated person. And I was so surprised that he had so limited information about how he can make his money grow. That's a simple concept. Our main objective is to provide information about various concepts of banking and what is happening in the industry and how it impacts them and how they can make best use of all these information available to improve their life, maybe build their wealth, maybe build their business. So that's what would make this very useful for the audience and us.
Welcome to the DTB Inaugural Bank on Earth show. We are happy to host our CEO, Mr. Murali Natarajan, and we are also privileged to have Julian Samboko, a renowned business journalist with Nation Media Group. So, Julian, perhaps I start with you, given the experience you have within the market. Appreciate our CEO is also very new to the market, so perhaps you can give us just a bigger picture, like how has it been so far this year? As mixed sentiments coming from the headlines and the business. Household conversations have some divergences. But what has it been for you?
Thank you very much for hosting me here, and congrats to DTB for having this platform to convene thought leaders on emerging issues. I think so far in the year, that is H1 2025, we have some green shoots, I must point out. One is that we closed 2024 with the contraction in private sector credit growth. We are clearly seeing that is beginning to tick upwards, and of course, that has good impetus both for households and for businesses. We have seen a very steady moderation of the inflation number, though at least towards the end it's been ticking up a bit. But the good thing there is that if you unbundle the numbers, and KNBS now does that for us, you can see the core element, which is basically the demand-driven side of it, beginning to push up, and that tells you the private sector growth is now feeding into the real economy, which is what we actually want. I think, having said that, there are a couple of headwinds. The most notable for the half year, and just to close at this point, is to point that Kenya's 4-year program with the International Monetary Fund was terminated prematurely. I think from an outlook perspective, that raises many questions, especially when you look at our macro environment and the sort of refinancing pressures we might have further down the road. We really need to go back to the fiscal playbook and recalibrate a bit, depending on how the outcome will be, given that we have already engaged the IMF for a new program. But maybe just the last point to point out is that to the relief of many, we have seen the onset of the payment of state arrears, what we like to call pending bills, at least in the road sector. From a cash flow and liquidity standpoint, that's a major shot in the arm, which I think we should all be celebrating.
And that's very critical for SMEs, who are the core for this business, because the value chain has a lot of them at they're downstream. And it's one sector where when you get the liquidity right, then you can get the economy bouncing back. But CEO, 9 months into Kenya, right? How's been the experience so far? Maybe not directly, I don't think you qualified, but perhaps through the businesses, what has been the experience? What's the sentiment coming through for you?
Julius covered a lot of macro points, and I want to talk a little bit about how I see at a customer level.
Absolutely.
So in 9 months, I must have visited at least 25, 30 branches. And in different setup, I must have already met about 1,000 odd customers. So I have a decent feel of how they feel about what's happening on the ground. So the general feedback we get is that things are a bit slow. But there is also this cautious optimism, as pointed out by Julius, that last year there was a bit of a contraction, right?
Yeah.
Now, with interest rates coming down, the demand should pick up. That's where the optimism is coming.
Mm-hmm.
What I also see is that many customers are using this opportunity to look at their business model, look at productivity, look at efficiency, and which is the right thing to do.
Absolutely.
And that would help them to capitalize as things start to kind of begin an upswing.
They are adapting to the environment.
They have to.
Yeah.
And it's only natural. Yes, some headwinds are still there. The kind of daily news that you start getting from US, the policies that are being announced, does put a little bit of doubt here and there.
Yeah.
But overall, having seen and met so many customers, in 9 months, I have huge confidence in the resilience of Kenya economy and its people. I just get the confidence that there is this positivity, underlying positivity,
Yeah.
that is likely to help us to move forward.
That's very reassuring, at least from a business perspective, that we're starting to see some green shoots, whether it's from the credit side, the confidence, the cautious optimism you speak to. But Julian, perhaps back to you. You mentioned part of the headwinds was, the lack of facility, that precautionary facility with the IMF today. And that notwithstanding, we still see significant stability, especially on the exchange rate, which is normally the channel by which you could measure how confident investors generally are in the economy. So is it that we don't have much pressure point, or it's just like a signal of confidence that the exchange rate is extremely stable despite the lack of that facility?
2 points to that question in response. The first is that from a global trends perspective, the greenback or the US dollar has been weakening across major currencies. So that already gives us a breather from an FX perspective. Coming domestically, ever since August of 2024, the Central Bank of Kenya has been very decisive and very clear about the monetary policy approach it is taking. And that is within the start of the regime of Dr. Kamau Thuge. The first thing that they did was to introduce the interest rate corridor to anchor the interbank rate. So from a signaling perspective, I think we have had a very different posture from what we were used to in the past in terms of anchoring expectations from the investor community. So that has played out quite a bit. The second fundamental there is that if you look at the numbers from an FX reserves position, we haven't been where we are in a very long time from an import cover perspective, from a quantum as well. So all those have come into play to give the shilling the sort of stability we have seen over this period. Granted, the global environment is very uncertain. We're having this conversation on the backdrop of the new battery of tariffs announced by the Trump administration. Kenya, thankfully, we are on the baseline 10%. We wait to see how that plays out. The central bank, by its own report, indicates that they anticipate about $100 million hit coming from that perspective.
Yeah, which can be well absorbed by the economy.
Exactly.
Yeah.
So we don't anticipate there'll be a lot of pressure on the case from that angle. But who knows? We have seen escalating tensions in the Middle East. Major central banks could begin re-angling their posture from a monetary policy standpoint, depending on how inflation evolves further down the road.
Yeah.
So we keep our eyes especially on the Middle East to see how that plays out.
Absolutely. And by all indicators, it looks like the stability could hold for a much longer period. But just taking the cue from the central bank, Morale, what is the bank doing to just try and, support SMEs? You say the growth is slow, but now we have a chance to do more with SMEs today. There's support coming from government with the payment of, arrears, the pending bills. As a bank, I know personally you're very passionate about the SME space as the core engine for this economy, and I've seen some initiatives from the bank to support this specific segment. But what more are you looking to do to support?
So let me start from the point that since December of last year, central bank has step by step reduced the policy rates.
Yes.
And that has signaled and also helped banks to reduce their deposit rates and cost of funds.
Absolutely.
DTB has almost reduced its base lending rate by 300 basis points over the last 7-8 months. This is something that will definitely help the businesses to reduce their burden on interest. The other point is that our focus on low cost of fund products like CASA will further improve our cost of funds, which can then be passed on to customers. Sometime end of last year, we started putting efforts into business banking, which is essentially MSME and SME,
Yes.
and retail banking. That is starting to show results. Over the next 3 to 4 years, we want to see at least 30 to 40% of new business originating from MSME, SME, and retail. There, we have to introduce new products, for example, a supply chain in MSME, SME.
Yes.
Make our policies and procedures simpler so that the access to a loan or banking product can be easier for these customers. In retail, we have strengthened our team in mortgages, in credit card, in scheme lending, and therefore we believe that we will be able to shift the portfolio mix steadily over the next 3 to 4 years, with particular focus on MSME and SME. In fact, when we go and talk to our customers, the general feedback is that they see us as a prime MSME, SME business.
Sure.
Right? And I think we want to capitalize on that positioning.
And Julian's, I'm sure in your other space you're an SME. Are you
Absolutely.
Are you already starting to feel the benefits from these changes from banks?
So maybe let me, Faith, with your permission, allow me to flip it a bit. My experience from my MSME perspective is that sourcing and originating is not really the problem. Payments is the problem. As an SME, and I'm speaking from my experience, I'm invoice rich. But my cash flows are not reflecting on my invoices because every other business, and I'm hoping this changes as we have the spending bills being sorted, every other business is asking you for a moratorium of sorts to extend it further, the credit horizon you had agreed upon. So that's a bit of a challenge that we are facing. I think from the access to credit side, certainly improved. Banks are calling, asking you, would you like a facility here or there? So the liquidity supply is existing. But from the real economy standpoint, your invoice rich, but your cash flows are not reflecting. And that's a huge headache for many of us.
Absolutely. But what could be the cause of the departure?
I think it's just that from the environment in which we were, especially dominating the better part of 2024, liquidity was really squeezed. And I think there's a hangover which is now affecting especially the first half of 2025. We certainly do hope, given the trends we have seen in terms of the yields and the interest rates and the settlement of these state arrears, then we can have that improve a bit because we need a lot of this cash circulating to be able to address this challenge.
Absolutely.
Yeah.
Absolutely. And
I want to add to that point. I think Julian is right. Definitely, which is what I started by saying, that customers complain about things being slow.
Yeah.
So what happens typically to an SME is that when they find that their payments are getting slower, they want to only deal with customers where the risks are low and where the payments are certain, which then results in some kind of a contraction, right? But I do believe that the liquidity should improve over time, because even reducing interest rates improves liquidity. And therefore, I would like to see this as a challenge, but hopefully a temporary challenge. And most economies that I am familiar with, 70% of it is contributed by SMEs, right? SMEs generate employment, right? And therefore, banks, especially tier 1 bank like us, focusing on MSME, SME, we will be able to play our part in improving the situation.
so that's very reassuring, I think, coming from the bank leadership. And I think that's what all SMEs want to hear today. They want that support. the one, the hand holding to navigate this environment. But Julians, now just looking ahead, I mean, you intoned to the environment getting a tad better because of the stability, the signals we're getting to from the central bank. But what is the one thing you're looking forward to?
What is the one thing we're looking forward to? From a business environment perspective, we're just praying and hoping for a lot more predictability.
Absolutely.
And let me just give some flavor around that. So we came from, of course, last year we had the protests in the streets, finance bill was rescinded. We had the tax laws amendment coming at the end of the year last year. 6 months down the line, we have Finance Act coming in, changing some of the changes we saw coming in via the tax laws amendment. So predictability has become a huge problem. And if you can imagine from a business perspective, if you're an investor, the first thing you want is certainty that whatever policy is in place will hold on for a protracted period, because you are scouting for your ROI from this market. So that is something which we are really hoping for. And of course, we do anticipate that stances will be taken to further catalyze the improvement in cash flows and liquidity that we're already beginning to see in the business environment. One of the proposals, and Faith, allow me to say this, one of the proposals which I took to the National Assembly earlier this year when we were making submissions on the finance bill was, it is time we had a conversation about revising our tax bands from a payee perspective. As presently structured, the 30% rate kicks in too early at about 33,000 shillings. It inordinately hits the low-income earners.
Absolutely.
So we need to stretch the bands and create a lot more breathing space for the low-income earners. Because finally, as the CEO rightly said, that is where it hits the most. And if you really want to move this needle forward, that's a segment of the economy we should be really sparring.
Absolutely.
Yeah.
Absolutely. And CEO, anything you're looking forward to as the year concludes?
I agree with Julian. Predictability and certainty of policies attracts investments.
Yeah.
There is no doubt about it. At the same time, most investors also look for quick response in situations where there is some external challenge. Because doing business in a competitive environment by itself is quite a difficult thing, right? And it's, if I was to look at how situation was 30 years ago versus now, complications have increased, competition has increased, unpredictability has gone up really high. So doing business is not easy. In that environment, some parts of the policies have to be stable for you to build your franchise. At the same time, when situation changes, you do want some responses to be quick, to be able to capitalize on the opportunity or protect your thing. So having said that, I remain positive, primarily because in informal environment, when you are interacting with customers, and like I started this conversation by saying, I met customers representing almost every part of the economy, whether you talk about hotels, whether you talk about construction industries, sugar, service, whatever. So I get the feeling that yes, the situation may be somewhat difficult, but it is improving. And also, given the structure that we have, we should be able to have a very decent growth from here on.
Just as we conclude, because I think we've been very elaborate in this conversation, short but very precise. Julians, maybe just your last thoughts on just the general economic overview, business environment, and perhaps what he could do better when approaching these critical segments.
Yeah, as we conclude, 2 points. One is that just to latch onto the point which has been mentioned here around policy proactivity and response.
Yeah.
This year, Kenya's next major maturity was amortized over 3 years, and that's the 2027 Eurobond.
Yeah.
But this year, the government seized a window very fast to kick off the refinancing and went with a buyback, $300 million worth. That by itself, and the fact that we went to the market at the right time, was a very good signal for the global environment, for investor community, and you could see it. You could see it especially from the Kenya shilling perspective. So that is one thing which I would like to really give flowers to the government. I think sometimes they don't tell their stories well enough.
Absolutely. Yes.
Having said that, if you now go back to statistics from the National Bureau of Statistics, increasingly, Kenya is creating jobs in the informal sector. If you plot it over 10 years,
Absolutely.
increasingly we're relying on the
Yeah,
informal sector.
yeah.
The challenge with that is that it is unpredictable. It more often than not has no benefits. It has no safety nets for the people who work in that environment. Until we address the labor market economics predicament that we are having as a country, and the fact that for over 6 years, real wages have been contracting, the socio-economic tensions that we have seen in the streets last year and this year will continue. So we need to have a very candid conversation about that, and where players in the private sector, like yourselves, come in. If MSMEs, for instance, who are the workhorse of job creation,
Yeah.
are dealing with perpetual working capital constraints, how does DTB come in? How do other banks come in? What is the role of intermediation in addressing some of those challenges? Can the government accelerate the settlement of the legacy arrears
Yeah.
to be able to address that?
Absolutely.
So there are very good bright spots, but there's this overhang of the labor market, which I think we really need to critically address.
Absolutely. And those are the segments we really deal with, because personal loans are like 50% of the banking sector portfolio today. But like you said, we're cautiously optimistic that things are beginning to turn around. Whether it will be at the pace we wish to, I think it remains to be seen. But CEO, maybe just as we close, yeah, what is that one thing that may keep you up at night, or the one thing you're really optimistic about?
I'm very optimistic about the MSME, SME sector
Yeah,
in Kenya. It's an opportunity, and there are some challenges for the banking, because for a customer to be bankable, you need information and you need some kind of a stability. But at the same time, that is where the opportunity is. If you can keep cracking the code in terms of how do you get to these customers, how do you safely finance them, how do you service them.
Yeah. How do you deal with the informal segments?
Yeah. So, and there are many countries who have done it very successfully, and there are some very good examples here as well. So, I believe that that is the biggest next opportunity for the banking sector and for DTB.
Absolutely. And you've run some very successful businesses, turning around some institutions where you've been before. What is just that one advice you could give to the businesses as they navigate this landscape?
I think we have to be aware of your business model, the strength of your business model, what are the opportunities, and in difficult times, take the opportunity to refine the business model, cut out hobbies, okay? Because we all have some hobbies in terms of, oh, this can do well, that can do well, etc. Ultimately, what is the return we are getting? How is it helping the customer? Is there an opportunity to grow? Those are some of the hard questions we have to keep asking ourselves. The more hard questions I feel you ask yourself and take those decisions, it helps the business.
Yeah.
Not easy, but that is how good businesses are built, according to me.
Absolutely.
Ask hard questions
Yeah.
to yourself, you know.
All right, fantastic conversation with our CEO Murali and Julian's of Nation Media Group. I think this is what this show is about, to inform you, to have conversations that can help you move the business to the next level. As CEO says, adaptability is critical for any business model in this evolving business landscape, and we look forward to having more of these conversations with yourselves. Thank you.